Friends, in today's video, we will discuss Parag Parikh Flexi Cap Fund. Portfolio of Parag Parikh Flexi Cap Fund is different from other funds in many ways. What are special features in portfolio of Parag Parikh Flexi Cap Fund and whether they are beneficial for this fund or hurt the fund's performance, we will try to find out in this video. As you might be aware, performance of any fund depends on its portfolio, and by looking at portfolio of a particular fund, it can be understood how fund invests in market and what kind of returns can be expected from the fund in future. Parag Parikh FlexiCap fund has so far generated very good returns in every time frame and is considered among the best funds in its category. And this is the reason why its AUM has increased to above 1,10,000 crores. In order to understand a fund's portfolio, it is not enough to just know which shares it holds and which shares it has added in last month and which ones it has sold out. There is much more to know, which we will discuss in this video. And of course, at the end of this video, we will also list its top 10 holdings. Now, first of all, let us discuss one special feature of Parag Parikh FlexiCap Fund's portfolio, which can provide this fund a big advantage and can also hurt its performance immensely. And this special feature is that this fund has invested only 77% of its corpus in equities and remaining around 23% is held in cash or debt. And that too when there has been a slight increase in its equity exposure last month. Otherwise, till last month, Parag Parikh FlexiCap Fund has invested only 75% of its corpus in equities and a huge 25% remained unutilized, which it has kept in cash and debt, where returns are dismal. Biggest advantage of this type of portfolio is that in future, if there is a downturn in share markets, which may happen due to ongoing trade tariff war, as if there is no good settlement regarding trade tariff between India and USA, then a downturn may hit the stock markets. So if such a downturn arrives, then this fund will get an opportunity to enter market at lower prices, which can prove quite beneficial for its investors. However, on the other hand, if everything moves smoothly and markets keep on rising, then funds investors will be on disadvantage as a huge portion of their investment will stay underutilized. Further, equity funds cannot keep investors' investment unused in cash and debt for a long time. And then in that situation, fund will have to invest its funds in such a market when market would already have been risen a lot. Second special characteristic of portfolio of Parag Parikh FlexiCap Fund is that this fund has invested 94% of its portfolio in large cap shares, whereas FlexiCap Fund category's average investment in large cap stocks is 63%. And this high exposure in large cap stocks has remained for a long time, and there is no possibility of any change in this situation in future as well. Because AUM of this fund has become so large that this fund simply cannot go for investment in mid cap and small cap shares, because the fund cannot deploy such a large corpus in mid cap and small cap companies. Since small cap and mid cap shares have relatively low market capitalization, and when Parag Parikh FlexiCap Fund places an order to purchase such small cap and mid cap shares, then obviously their prices will be immediately affected. They will shoot up, and whenever Parag Parikh FlexiCap Fund wants to exit from these shares, then the fund is likely to face liquidity problem. And along with that, it will also not get good prices for exiting from small cap and mid cap shares when the fund pump large sale orders in small and mid cap shares. However, fund's total investment in large cap shares also gives this fund much needed stability in its performance. As you might be aware that there is not much fluctuations in large cap shares, and this is why there are not much fluctuations in funds NAV either. Along with that, an advantage of investing in large cap category is that when there is a downturn in market, such shares fall less. So this fund is able to provide downside protection for this very reason, because it's almost all the exposure is in large cap stock. Basically, due to fund's very high AUM, this fund has practically become a large cap fund rather than a flexi cap fund, and it is likely to remain like this in foreseeable future as well. But if you look at positive side of this phenomenon, then it also brings stability to fund and also provides downside protection. However, its disadvantage is that in long term, large cap shares tend to generate lower returns compared to small cap and mid cap shares. Having said that, one fact you cannot ignore about this fund is that despite having its entire exposure in large caps, this fund has provided decent returns both in long term as well as in short term, and also outperformed its category averages in all time frames. Despite having maximum investment in large caps, funds performance is commendable. And the reason behind this is funds prudent stock picking and also funds selection of right sectors to invest its corpus. Fund invests in sectors that deliver good performance, and for this fund takes big bold bets. For instance, presently fund has invested 38% of its huge corpus in just one sector, which is financial sector. When you take such a large exposure in companies of just one sector, then advantage you get is that if that sector performs well, then funds returns automatically become above category averages. And this advantage has also come to Parag Parikh Flexi Cap Fund. And because of good performance of financial sector, its returns have also been good. But other side of this strategy is that if your sector selection turns out to be wrong and there is a decline in the performance of that particular sector, then there can also be a sharp fall in funds performance. So here again, credit must be given to Parag Parikh Flexi Cap Fund and its fund managers for their experience that so far this fund has not been seeing this happening. For about 12 years, this fund has been in existence and it has always given stable returns to its investors. There is another feature of the Parag Parikh Flexi Cap Fund's portfolio which makes this fund unique, and that is its international exposure. There are very few funds which have international exposure. Parag Parikh Flexi Cap Fund's international exposure provides its portfolio stability as the fund gets international diversification through this exposure. So its portfolio is already quite diversified, and due to having international exposure as well, it gets an extra diversification which investors don't get in most other funds. This fund has invested 11.14% of its portfolio in international equities, and that too in shares which are considered blue chip in international markets. These shares are Facebook, Microsoft, Alphabet and Amazon. Along with this, Parag Parikh Flexi Cap Fund's portfolio turnover ratio is also very low at 36.43%, whereas category average is 167.91%. So from this fact, you can also understand that the fund doesn't churn its portfolio much. This depicts that fund follows a buy and hold investment strategy, which is known for delivering stable returns in long term. Now let us discuss portfolio diversification in Parag Parikh Flexi Cap Fund. This fund holds a highly diversified portfolio which you can witness from number of shares in its portfolio. Whereas the category average is 62 shares, Parag Parikh Flexi Cap Fund has 87 shares in its portfolio, which makes this fund a more diversified fund compared to its category. Along with that, its exposure to international equity also provides its portfolio with more diversification and stability. Despite being highly diversified fund still believes in concentrated portfolio management in a particular manner, as it focuses on select shares which have long track record of high growth and profitability and commits a significant part of its portfolio to such shares. This fund has committed 50% of its portfolio in just top 10 shares in its portfolio, whereas category average is at 38%. This depicts that although this fund holds a lot of shares in its portfolio, that is 87 shares, but it has invested 50% of its corpus in just top 10 shares, and remaining 77 shares have remaining 50% of the corpus distributed among them. As these 73 odd shares get very little investment in them, and therefore that investment is there only to provide stability to funds portfolio. Whereas its bread and butter, its growth, comes from its top 10 shares only. These top 10 shares are well known, tried and tested blue chip companies with long track record of high growth and profitability. Further, they have potential to deliver good returns in future as well, as funds exposure itself is 94% in large cap companies, and when we discuss about funds top 10 investment, then obviously all of them are bound to be large cap heavyweight companies. These companies are HDFC Bank Limited, Bajaj Holdings and Investment, Power Grid Corporation, Coal India Limited, ICICI Bank Limited, ITC Limited, Kotak Mahindra Bank Limited, Bharti Airtel, Mahindra and Mahindra, and Maruti Suzuki.